Hi there. Thanks for tuning in. Today, we're going to be doing an analysis and valuation of American Woodmark. And what American Woodmark does is, well, they do work with wood, but really what they do is they make kitchen and bathroom cabinets. Very simple, straightforward business. That's cool because, among other things, it's easy to understand how they make money. They make those, they try to make them for as little cost as possible. They sell those, usually to third parties, not really directly to the consumer. And then those third parties sell it to the consumer. So generally, they actually report earnings a little later in the year. So right now we're comparing these 9 months that ended January 31st for 2024 and 2025. And here the net sales are looking a little flat. In these 3 months ended, they're looking a little down. So in general, this picture that we're painting right now is one where they're going to do a little bit worse this year than the previous year. And you can see this at the very bottom with net income, where it's significantly lower in the 9 months ended January 31st and in the 3 months ended January 31st. So comparing this quarter to last year's same quarter. So that's what to expect. And even in free cash flow, now this is a very, very different picture where the cash from operations was much higher in 2024 than in 2025. And even though the capex is lower, also the free cash flow is much, much lower. We're talking $100,000 less, which is a pretty gargantuan amount, honestly. Now, I also want to show you the debt mix. So here they have basically all of the debt that they have and all the loans that they have, revolving credit, financial lease obligations. All of it is coming due in 2026. They have two options. One of them is to pay it, and the other one is to kind of refinance and kick the can down the road and rebalance it, which is what most companies do nowadays. So, yeah, this is something important too because it'll show kind of what they decide to do. Their as we see, net income is not that much, and same with the free cash flow to just pay it all in one shot. So they're probably going to rebalance most of this eventually. But yeah, in general, their debt issuance costs are decently low and their current maturities are few, but they will have way more coming 2026. That's something that anyone should take good note of course. And hopefully they don't just grab a bunch of debt to pay down that debt, but that's what they may do. Now, if we look at the longer term picture here, this is a company that grew from below 1 billion of revenue a year to now around that 2 billion level, which they touched in 2023. Now went down a little bit. It'll probably go down a little more this year. Gross profit, gross margin percentage, for example, is hovering around this 20% level. Some years they do worse, some years they do better. But in general, it's a picture of decently steady margins. Same with operating margins, which have actually been somewhat improving. And if you see the return on invested capital is a mixed bag here, it goes up, it goes down. This is not excellent, but still positive, and at least it's growing, especially compared to, for example, 2020, 2021. So that's important to note. Now, one of the risks, and I highly suggest everyone who's analyzing a company go to the 10K and look at what their competitive advantages are and what the risks associated with the business are. For example, one of their competitive advantages is that they're the third largest cabinet maker in the US. So that's pretty cool. However, here they have a concentration of their sales to their two largest customers. So 41.6% of total net sales during fiscal year 2024 were at Home Depot and Lowe's. So if one of them has a different contract with a different cabinet maker and all of a sudden is not buying American Woodmark, then they're going to be quite in trouble. I mean, it's not going to be as extreme as, for example, the case of Mesa Airlines, which operated planes for United and American, and then United pulled out. So that's more than half the revenue just gone overnight. It's not this extreme because it's only 41.6%, but still, their termination of the lease with either of them would be very, very detrimental to the company. Another thing is the raw materials and the raw input costs. I mean, what is the material you use for cabinetry? Usually it's wood, it's lumber. And the cost of lumber, especially if there's tariffs, if there's a shortage of it, is important too. And another thing is that they depend on the construction of housing, right? New housing, housing remodeling. They need a strong economy because if I'm remodeling my house, it means I have money. If I have money, it usually means there's not a recession going on for the average person, right? So they depend on a strong economy and on strong house building. So that's what the headwinds are at this point. We're starting to sort of analyze it and break these things down, right? Now I want to do a discounted cash flow model here. What I'm basically going to do is I'm going to zero out their free cash flow for 2025, really. And the reason why is because, as we see, there's a huge drop in free cash flow. They're not doing that great. So, yeah. And then from there onwards, we're going to start at this $96 million and then just grow it slowly at this 3% level. And I'm just going to grow it in perpetuity by 3%, basically. Now, my required rate of return here is 11%. That's 1% more per year than the market has historically returned on average. And I'm going to divide this by the total number of shares out. And the fair value that I get with the discounted cash flow formula is $71.86. However, if we subtract the total net debt that they have, then the value post debt is of $49.44. So that's what I think each share is worth with the net debt included. Now, American Woodmark currently is trading around that $60 level. They have a P ratio of less than 10, a market cap of less than, well, $1 billion, really. And so it's a small cap company that's trading at a pretty low looking PE. However, I'll warn you, this drop, there's been even bigger drops. Look at this 2021 to 2022 story here, where it was trading at over $100 and then it went down to 40. Here it was trading at over $100. Now it's down to 60. Could it go down to 40? I think it's possible, right? I think even here it's technically a little bit overvalued if you're considering the debt. If you're not considering the debt, it could look like a deal, but it may have further to fall. I think and in general, I think they depend on a lot of things. For example, new residential construction. Look at this little blip here where there's less housing starts. So if this blip turns into a depression and less people are building housing, and that could be for any amount of reasons, right? It could be permitting and zoning. It could also be things such as the fact that sometimes companies um, don't want to build more housing with raw input costs being higher, if there's tariffs on Canadian lumber. So all of these factors will change whether or not people are buying more cabinetry to make new houses. That's very important. So I think it's interesting at the right price. The numbers aren't necessarily bad. The margins are improving a little bit, and buybacks plus debt payments could give us good value, but we don't know what's going to happen with the debt just yet. And that's very important to note. That's something that I, as an investor, would keep a good eye on. And that's why it's important to keep looking at those yearly reports. However, chances are it will probably fall further and be an even better buy later on based on headwinds from the US economy and housing starts. Besides, tariffs are uncertain, especially on raw materials that they use. So maybe after the dust settles, we'll get a better picture and updated guidance, and that will help us make a more informed and less risky decision. So if it falls down back to $40, that to me is incredibly interesting. If it stays at this level or even goes back up, I would probably pass on this one. So sometimes waiting pays off. And sometimes the best measure you can take as an investor is to just wait a little bit. Now, thank you so much for watching. I hope you have an excellent day. And if you want me to analyze any other stock, please just comment down below and just don't forget to like and subscribe. Thank you very much. Have a great rest of your day.